While the economics of the Bitcoin market is complicated, various cryptocurrencies, including Bitcoin, are meant to be inflation resistant or to have predictable and low inflation rates. And while Bitcoin is often seen as an inflation hedge, recent economic changes have resulted in Bitcoin performing less well than a pure hedge. We'll discuss more of crypto as an inflation hedge in the video. Stay tuned. The cryptocurrency has grown increasingly synchronized with overall market fluctuations, owing mostly to institutional investments. This indicates that if the market falls, Bitcoin will most certainly fall as well. As a result, when news of inflation arrives, the Federal Reserve will almost certainly impose a dual mandate. Policy interest rates will rise and monetary policy will tighten. As a result, the value of assets, including cryptocurrencies such as Bitcoin, will fall. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here, we are building a community to help each other stay informed and make the most of our financial gains. Do cryptocurrencies experience inflation? Yes, cryptocurrencies like Bitcoin, which is widely seen as inflation resistant, undergo inflation. Bitcoin, like gold, undergoes inflation as more of it is mined. However, because mining for new Bitcoin is automatically decreased by 50% every 4 years, inflation rates must ultimately fall. Bitcoin's normal yearly inflation rates aren't generally a big source of concern for investors as long as its value continues to climb versus fiat currencies. Other cryptocurrencies, on the other hand, may perform differently. Stablecoins, for example, are tethered to fiat money and are low volatility cryptocurrencies that may be used to save money. Stablecoins, on the other hand, are prone to inflation and may lose value over time. Stablecoins lose value when their reserve currency loses value. Is Bitcoin deflationary or inflationary? Bitcoin is, in theory, an inflationary currency. This is because it was created to mirror gold's constant inflation rate. While the traditional definition of deflation implies that Bitcoin is deflationary since its purchasing power rises over time, deflation refers to a decline in the money supply, or substitutes thereof. To be clear, deflation is more than just a drop in prices, though it is commonly described as such. The monetary situation that produces such a price fall is referred to as deflation. As a result, Bitcoin cannot be deflationary since its supply will not diminish. Instead, it will gradually expand in supply until it reaches a hard ceiling of 21 million coins. Bitcoin will neither be inflationary or deflationary once this ceiling is reached. Instead, it will become disinflationary as planned, resulting in a fixed currency supply and an unchanging supply. Is Bitcoin immune to inflation? So the question is Bitcoin a good inflation hedge? While gold has long been considered the go-to inflation hedge, cryptocurrencies such as Bitcoin can provide excellent options. Rather than being inflation-proof, which implies total impenetrability against any external changes, Bitcoin is more of an inflation-resistant asset. Bitcoin, being the largest and most established cryptocurrency, is often regarded as a solid inflation hedge. It may even be seen as a better hedge than gold. Despite being more volatile than gold, Bitcoin has stronger long-term growth potential and hence protects against inflation. How so? Limited supply. Bitcoin's limited supply makes it an excellent inflation hedge. When the supply of an asset is fixed and limited, new coins cannot enter circulation, hence removing the possibility of inflation, not tied to a specific economy or currency. Bitcoin, like gold, is not owned by any one institution, economy, or currency. It's a worldwide financial asset that reflects global demand. Bitcoin is a superior investment to stocks because it avoids the numerous economic and political risks involved with stock markets. Easily transferable. Bitcoin, like gold, is long-lasting, readily replaceable, rare, and safe. Bitcoin has an advantage over gold since it is more portable, decentralized, and transferable. Unlike gold, which has a limited quantity in sovereign states, Bitcoin may be stored by anybody due to its decentralized structure. Why is inflation important for crypto? High rates of inflation for fiat money may lead to increased investment in digital currencies to alleviate concerns about their fiat currency losing value over time. Cryptocurrencies such as Bitcoin or BTC and Ether or ETH offer an excellent option for investors looking to expand their investment portfolios. Benefits of Bitcoin's fixed supply. Scarcity is one of the factors to make an asset resistant to inflation. Because Bitcoin has a finite quantity, it remains rare, guaranteeing that its price will remain stable over time, which is why it's referred to as digital gold. Satoshi Nakamoto, the creator of Bitcoin, intends for each unit of Bitcoin to appreciate over time. This was made possible by the limited maximum quantity and the sluggish rate at which new Bitcoin is created. No new Bitcoin can be generated after the maximum number of Bitcoin has been reached. Transactions will proceed as usual, and miners will continue to be compensated, but solely with processing fees. What will happen to Bitcoin in a recession? Bitcoin arose from the ashes of the 2007-2008 financial crisis, sometimes referred to as the Great Recession. Satoshi Nakamoto created Bitcoin in reaction to frequent bank failures to offer people money that did not rely on third parties or central authority. As a consequence, a cryptocurrency free of any institution or sovereign nation was created. During a recession, negative economic consequences might spread to nations with economic relations. Bitcoin can potentially act as a recession-resistant asset due to its inherent diversification. While the US dollar is subject to the advantages and constraints of the US economy, such as GDP, export prices, monetary policy, and currency demand, Bitcoin is not bound by any single country's loss or gain. Furthermore, Bitcoin has value, regardless of how an economy performs. This is because it is a rare and secure asset. It is also internationally transferable. Bitcoin's fundamental function is to serve as a store of value, which is why it is projected to outperform rival cryptocurrencies such as Ethereum during a recession. Has it been the perfect inflationary hedge it was envisioned as? Bitcoin's value has plunged this year, undermining the frequently expressed argument by crypto advocates that it may be an efficient inflation hedge during periods of economic instability. Bitcoin supporters have long contended that the currency's scarcity will defend its value during periods of increasing inflation. Unlike central banks, which may expand the quantity of money, coins have a limited supply, which makes them rare. Even before the market plummeted, there was speculation about whether Bitcoin would retain its worth. Billionaire investor Paul Tudor Jones believed Bitcoin may be used to hedge against inflation. But Dallas Mavericks owner and investor Mark Cuban dismissed the concept as a marketing slogan. Another argument is that, like gold, Bitcoin and other such cryptocurrencies will have an intrinsic value stored when they gain acceptance. Supporters believe it will be viewed as a long-term asset that will not depreciate. However, this has yet to be established, at least not conclusively. The whole value of the cryptocurrency market has fallen in tandem with growing inflation, with Bitcoin shedding half of its value since January. According to Anjali Jariwala, certified financial planner and founder of Fit Advisors, the level of price volatility in crypto makes it difficult for her to regard it as a long-term store of value. According to Jariwala, cryptocurrency in general is a new sort of asset that does not yet serve as a valuable commodity like gold or even as money because it cannot be easily traded for an item or service. Despite its scarcity, the value of a cryptocurrency like Bitcoin is still heavily influenced by consumer mood, according to her. It's complicated since it's meant to function as money, is taxed as property, and some people equate it to a commodity. At the end of the day, it is its asset class with no clear definition. Another factor to consider is that cryptocurrencies such as Bitcoin have only been operating for a little more than a decade. As a result, there isn't enough context there in terms of historic data to truly appreciate what function it serves as an investment, according to Jariwala. While cryptocurrencies such as Bitcoin have yet to be proven as safe, long-term store of value, they may acquire acceptance and become less volatile over time, according to Omid Malekin, an adjunct professor at Columbia Business School who specializes in crypto and blockchain technologies. Once volatility settles, we will have a better picture of how it reacts to macro developments, such as the inflation rate or what the Fed is doing, he says, warning people that current crypto prices could reflect a variety of factors other than inflation, such as too many heavily leveraged cryptocurrency lenders or an absence of regulation. In any case, cryptocurrency as a whole remains a very speculative investment. Jariwala advises only investing with money you're willing to lose. She also advises thinking of crypto investment as a long-term plan and sticking to it even in difficult circumstances. Cryptocurrency may grow into a more mature asset that may be used as an inflation hedge, but we won't know for sure until we see more of a track record with it, adds Jariwala. That's a wrap for this video. Let us know in the comments below if you think crypto is a good hedge against inflation. If you enjoyed this video, give this a big thumbs up. And do not forget to subscribe to our channel if you want to see more videos like these. See you next time.